Good morning, everyone. This is Vance Williams out of the United States, here in the Seattle area. It's Tuesday, May 20th. Welcome to my live Forex trading show. I'm starting a few minutes late this morning, but that's okay. Price is not doing anything right now that you would have missed out on. We've got a great show today. Going to talk about mastering price logic. So we'll get to that in just a moment. I want to just respond quickly to those asking about my ultimate training program. I'll be opening that soon to a handful of people. It won't be as many as last time, but anyone who wants to participate, you will need to speak with me personally. It'll be affordable. There will be no risk. It'll just be something that you love to do. Very quickly, if you want to be the first to find out when that opens, all you got to do is go to forexartofwar.com. forexartofwar.com. It's my homepage where you see the video, and click here on my picture, free consultation. And while you're waiting to speak with me, you'll get my book that everybody loves, Seize the High Ground, which will show you where the market is most vulnerable to you taking profit. So it's got some great ideas and logic in there. You're going to love it, and you get to speak with me. And so that's that. Okay, so Before I start talking about the market, I just want to congratulate Daryl, who just moved to level 2 in our training program. Great job, Daryl. Also, Becky just moved to level 2 today. Great job to you as well. And Tom, special acknowledgement. Tom just finished his first series of trades in level 3 with his own trading plan that we created. And Tom did a great job. Holy smokes, he did a great job. So just that's a little update. I've been announcing that on the show, just talking a little bit about the traders who are going through the training program. By the way, on my page, on the horizontal link on my homepage, you'll see members experience. I just allow people to write whatever they want there, so there's a lot of feedback. If you want to know, does this really work? What is people's experience on the inside of this? So take a look at that. Now, in my email today, I shared that I'd be talking about price logic. This is what I do all the time, but if you're new, or even maybe if you're very experienced, you may not have even noticed what I'm doing. But what I'm doing is different than just about everything you'll see out there. So to help you understand this, the most important idea you can begin with is this. Great logic comes from repetitive human behavior. Again, great logic comes from, and write this down, repetitive human behavior, not repetitive candle patterns, not repetitive chart patterns, not repetitive indicators, because what you're looking for is the same thing all the time on the indicator or the chart pattern. Okay, candles, charts, and indicators, those are symbols that are used to represent human behavior. What I'm doing is actually reading the behavior itself. Now, you can call this core logic, much in the same way you would reduce a fraction, let's say, let's say 1/2, or let's say 2/8 down to 1/4. So it's kind of the lowest common denominator. It's the best information you can use to read price. Now, another idea. Trading comes down to two simple ideas in the end. First, one, write this down, you need to be able to see when the buyers or sellers have a high probability advantage. And two, we need a strong enough advantage. In other words, once they have an advantage, you need a strong enough advantage so that you can enter and exit with good risk management. Now, I know this is new to a lot of people. I've been doing it for years, but I haven't really explained it that well, or haven't tried to. But try to see that when I'm reading price here, I'm only using the best logic. I'm only using what human beings repeat over and over again. Now, candle patterns, chart patterns, indicators of any kind, they're all okay. It's just they're not going to give you the accuracy that you need to be in that 70% or higher wins, and you need to be above that 70% threshold in order to avoid the psychology of consecutive loss, or said another way, to prevent yourself from being disabled psychologically. Because I can tell you right now that after doing this for 10 years and working with thousands of people, most of the people every day, whenever they lose 3 or 4 trades, they change something. And it's just natural because of, you know, how we feel about losses. But the reality is that losing 4 or 5 in a row when the market changes, you know, we call this a drawdown, that's normal with a winning percentage of 70%. So there's just a little blind spot there. That's not the only thing you need to know, but it's definitely a huge thing that we discovered in 2010 when we were working with people. Okay, there's hang on one sec. Sorry, this live show, and I didn't hit the mute button. I just kind of moved the mic away from my mouth. One of the things I forget to do is use my voice from the time I wake up to the time I start talking on this show. And so, you know, when I started talking this morning, it's the first time I talked today, and I need to talk a little bit before I get to the show. So anyway, as I was going to say, there's no more high impact data due out this morning for the pairs we trade. And so let's start taking a look here at price. Now again, keep that idea in mind. Buyer or seller high probability advantage to a range big enough to enter and exit with good risk management. Now things have to get complicated and difficult before they get simple, but it really comes down to being that simple in the end, those two things. All right, and obviously you can always rewind the show if you didn't write that down. But here, now what we're going to look at first here is we're going to look, this is the Euro 30-minute chart. Again, I'll remind you guys who are trading with daily charts, I started with daily charts. I love daily charts. And when there's a long-term trend, you know, which we may be getting right now, I will return to trading daily charts. But since the crash of 2008, there's been a lot of uncertainty in the world. Price probably took off, I would say, November 2012. They stepped on the gas January 2013, but only 3 weeks ago did price break out of that 5-year range, and the central banks are struggling to push it back in there. And so we'll talk about that again. In fact, let's just real quickly show you that weekly chart. This is the 5-year range that price has been stuck in. See this? This goes back to 2008. Been stuck in this range for 5 years, and so this is the first time it's actually closed out on the monthly. You see a weekly close, but then it gets back in, but it closes out of the monthly here. So it closed out, it moved up, it came right back to it. I know that's kind of small, but it came right back to it, and they're trying to hold out. So we're watching again, just like we were last month, to see that monthly close above. We're watching to see if you know, the central banks can force that back down in here before the end of the month. If they can, I think we're going to take off, and we will have a long-term trend. So I'm pretty excited about that, because I would love to use our incredible price reading skills to get into a trade with a small stop loss and hold it for a long time. That'll be something we haven't been able to do for a long time. So I think the future of Forex trading here for the next you know, foreseeable years is going to be pretty great. All right, so now let's go back to the euro. This is the 30-minute chart intraday, and I identified this level yesterday right here, 137.23, as the area that price needed to move above, and it did pop above here briefly and then shot back down. Let's take a look. We're going to zoom in, because what we've got to do, first of all, the logic is that there's no high probability advantage. Notice high probability advantage unless price gets out of this range. So that's the first thing that needs to happen. The next thing that needs to happen is we need a range big enough to enter and exit with good risk management. So let's see if we got that opportunity, because this obviously came out and just reversed. So let's see what happened. So we get on a 5-minute, and we go back over here when this happened, and you can see that price took off, probably a little bit of high impact data moving this, took off, came up, ran up here. I'm not sure it retraced along the way. It did not. And let me get this up here. And so it moves. How far? We need a minimum of 20 pips of advantage. We went to 31. It moved out of the range. Now, here's why we would not have taken that trade. If you're trying to trade a high probability advantage, and let's say this is the mud pit in the tug of war right here, you don't want to enter in the mud pit, you know, or when things are, I should say, when things are even, when nobody's in the mud pit. You want to, right now, as this was pushing out here, they were pulling pulling the sellers into the mud in the tug of war. Now, what happens is the sellers pull back out of the mud right here, right? It's an even match down here. And so we don't ever enter prior to 38.2. So the bottom line is we can't get in at 38.2 above this range. So all of this is, you know, kind of the science of what I do. The move starts here, goes all the way up to here. Now, in order for us to trade this, we would have needed to move a little bit higher so that this 38.2 level, our entry point, our earliest entry, is above the range. And so we would have let this go, especially the live traders. Okay, so let's go back to the 30-minute and look down here on the bottom. So on the bottom side, we were looking at something like this. Now let's see if there was a trade right in here that would have let us in before we hit this bottom. Because if we have a trend turn over and there's room to trade to get in and out with good risk management before it hits the bottom, we can do that. All right, so now let's go over to the 5-minute. Okay, as it was coming down to that range, let's just take a look at the movement. There's one wave right there, 6 pips. Here's another wave right here, it's 10 pips. So as you can see, there's not a strong enough move. There's not like 20, 25 pips or more of strength, of advantage for us to get in and out with good risk management. So then it comes along and it moves out of the range. And let's take a look at what this movement was. From here to here is a wave. And you know, you just have to learn my technique for new waves in order to know how to draw these. But there's 13, too small. And then we get down to the last move, which is 17, again too small. So we don't get caught in this head fake that comes out of here. Again, logic keeps you in the high probability trade. The logic is, what's the logic of having a strong enough move? In other words, a strong enough advantage to enter and exit with good risk management. The logic is that and that's the behavior. The behavior is if you don't have at least 20 pips, it's not going to be high probability. They're going to reverse, you know, more than 70% of the time. And so that's the logic. It's telling you what's likely to happen based upon the human behavior. So everything I do is based on some form of human behavior that repeats over and over again. And it's not actually that much. You might, if you're new, you might go, "Gosh, it sure sounds like a lot." It's really not. In fact, you'll learn more. You'll learn everything you need to know to make consistent profit in 2 months. And if you're still learning about the market after 2 months, you're not studying the right things, because this is like 5% how to read the market and 95% how to execute high-risk decisions. All right, so that shows you how we stayed out and didn't fall into any of those traps. Now let's pop over to the pound. We had this key level here yesterday at 168.36, and you can see the pound pops out of this level as well. And the buyers are showing some strength right now, so I'm looking for this to continue to make a move, and keeping in mind that there are some sell orders sitting up here. But let's watch what happens when it comes out of this level. Let's zoom in a little bit. Let's see if there was a trade here. Drop down to the 5-minute chart. And here's where price moves out. First thing we want to do is follow this up and see if it retraced 38.2. It did not. So it's still moving, still the same wave, till we get all the way up here. I'm not able to see this in real time, so I'm not sure if this came over here, went down and went up, or went up here, went down and went up. We could drop down to the 1 minute and take a closer look, but I'm not going to do that. But it looks to me like price probably did retrace to 38.2 and make a second push. You know what? We're just going to have to look on the 1 minute. Let it load. Give it a moment. I'll take a sip of coffee while we take a look at that. Unlike TV shows, I can do whatever I want. I can go longer. I can go shorter. I can not do a show at all. I can do it at a different time of the day. I can do whatever I want. All right, so let's see if we can get back to that area where it crossed out. Okay, so as we're looking here on the 1 minute, boom, boom. It's still a little bit difficult to see, but it looks like it went to here, pulled back to here, and shot again. But it's, again, without viewing that in real time, we don't know. And it was a strong enough advance. So this is one of those situations where to know whether the behavior that we look for is played out, strong push, pull back, second push, you'd actually had to have been sitting there in real time and there's probably some high impact data happening right around this time for the pound. So that's the way it goes sometimes. If you're not there, you don't actually know what happened if you get down, you know, that close to things. All right, so I noticed there were some interesting things on the Kiwi and the Australian dollar this morning. So this is the Kiwi 30-minute. Again, I was looking for a seller high probability advantage coming down here as it came through this key level. Let's zoom in on the 5-minute and look for the trade. There actually was one. So these movements here are too small to enter and exit. So if you were to try to put in a trade, just be very easy for you to get stopped out by noise. So we never, let's see if we get a trade here. This one moves right to the bottom of the range. It's only 17 pips, so that doesn't help us. But here, price moves all the way down with no retrace. And so that's the first thing. Sellers have a high probability advantage. Now, a range big enough to trade. So I go down here, I see 40 pips. So then we look for our pattern. Clear price move with no pullback. Pullback to 38.2 or more. Second push. And so your high probability target is going to be in this area right here. Your high probability stop, again, everything has a probability is going to be above the barrier. High probability entry is going to be, you know, is going to be right about in there. And so depending on your personality, you know, you might be a little bit more conservative. Maybe a few people miss that trade, but by and large, most the traders going to catch this. So that's how the whole thing shapes up there. And that's really the only trade that shapes up. Let's take a look at what just happened. We've got 23 pips coming down below here, a new wave, and better get rid of this. Let's see if we've got a potential setup right now. Keep in mind that also the repetitive behavior of the Kiwi and the Australian dollars, they tend to retrace very often 50% or more. So as you get closer to real trading, you need to wait for a better price. So this one's actually retraced 38.2 right now. It's looking pretty good, 24 pips. So this is potentially something you could trade. I would encourage our traders to wait for a better price if you're going to take advantage of something like this. All right, Australian dollar. This is the Australian 30-minute. You can see that this was the range right here. The sellers started to come out. They came back to it, and then down they went. So let's take a quick look, zoom in. We don't trade a 5-minute chart. You can't see what the behavior is on a 30-minute chart. You have to zoom in and look for the behavior patterns. And so we can see something coming down here. So we follow it down. We've got only 17 pips for this wave. This wave is only 15 pips. This is a chop, chop, chop. We won't even measure that. These waves are too small. And then there's one here that's 16. And if you're patient, the market will give it to you. Here we go, 25 pips. There it is. So there's our strong price move, seller advantage. Price move strong enough to enter and exit with good risk management. Pulls back to 32 and 50%, and then pushes again. Where's the optimal profit target? Optimal target is right in that area right there. Move down a little bit, right there. Probably more conservative entries, 50%. That puts your stop somewhere about right there. We like to be above the former support or resistance. So again, there it is. So, you know, trading is really about, you know, being able. First of all, you have to know what affects your probability of winning a trade. Think about that for just a moment. Turn your computer off and go for a walk and think about this one idea. You have to know what you're doing. You have to know what affects your probability of winning. You can't just wish and hope for some system with indicators and stuff to, you know, that you have to have total faith in. What you want to do is you want to make your decisions based on something you understand, right? We know that when price makes a strong move in a direction, it's going to pull back and push again. We know that. How do we know that? From hundreds of years of repetitive behavior, right? So be really careful about that. You know, you should understand why you're making this decision. Just like when you play poker, you know that a pair of kings beats a pair of tens. All right. So let me see what else I have here. That's about it. I just want to say again, if you want to register for my training program, not register for the program, but if you want to be the first to find out when I'm going to open it up, it's probably going to be like 10 people or so. Just register for a free consultation, and that's no obligation to buy if you do that. And you know, I tell you how to do it. You don't have to join my program. I'll tell you how to do it. I'm a training program, and you know, I'll help you. I'll save you years of time. But if you want to do it on your own, I'll tell you how to do it. And if you're waiting for me, you'll get a chance to read my book, Seize the High Ground, as soon as you register here. Also, please put in your phone number, and if you got a Skype ID, put that in. You know, I'm not really going to try to chase people down, guys. Talking to people is like, you know, it's like the third priority for me. The first priority is my trading, then the traders, and then talking to other traders. So please be thorough with your information. So with that, I want to thank you all for joining us today. To our members watching, I'll see you guys in our live trading room coming up in about 35 minutes here, and we'll follow the market together as the New York Stock Exchange opens. You guys have a great one. Cheers.